Hello traders, the title of this video is how to trade Fibonacci extensions like a pro. Today is the 10th of October 2014 and the time in London is 8 minutes past 11 p.m. in New York, 8 minutes past 6 p.m. How to trade Fibonacci extensions like a pro. Alright, the first thing I want to clarify with traders, okay, we need to ask the right question. Okay, what is an extension? Okay, so if there is an extension, from where will the extension begin? So there is an extension of an object, and we want to know where and when the extension will begin. All right, what is an extension? So there is if we say there is an extension, it means that something has been prolonged beyond its normal, okay, a cycle. So if I say, for instance, something is supposed to go from A to B, if it goes beyond the point B, it's an extension. All right. Because traders, when they are using a Fibonacci extension, they think these Fibonacci extensions are magic level. They are not magic levels. They are key levels that we must pay attention to. It's like when you are driving, okay, you want to know where are the junctions, where are the traffic lights, okay, where are the bumps, okay, the thing that you need to know to drive safely from A to B. So as a day trader or swing trader or an investor, you want to know where are the support, resistance, and key levels that the professionals are watching. Otherwise, it's like you are trading blindly. Suppose you are buying at a major resistance zone. That's the craziest thing that you can do, all right? And on the other hand, suppose you are selling at a major support level where professionals are waiting to buy. That's the craziest thing to do. So the best approach is to know where are the resistance level. So if the price moves from A to B and reaches a resistance zone, we want to check the fundamentals. I need to remind traders that my trading approach is not all about technical trading, all right? It's about combining the technical analysis and the fundamental. Especially if you are swing trading, you cannot swing trade successfully if you are disregarding, okay, the fundamental. Check Google Finance, put the epic of the stock that you are trading, check the balance sheet, do what we call Google Finance acid test, okay, compare, okay, the short-term value, okay, to the short-term liability, okay. You must always combine the technical and the fundamentals, okay? So, suppose a financial instrument moves from A to B and reaches a major resistance level. What's the next step? The next step is to go and check the balance sheet, do the Google acid test, check the economy news. If, for instance, we see that, okay, the stock has failed the Google Finance acid test, okay, all right. We also notice that the market itself, which is represented by the S&P 500, is at a major resistance and is also bearish. Okay, all right. And now we see that, okay, the company, in fact, is losing its market share. They are not innovative. They are not making money. The cash flow is drying up. Well, we have now valid reasons why we can look for opportunity to sell it. All right, so it's not because the price reaches a resistance level that we should sell, or because we see a double top, or we receive a sell signal that we should sell. Now, after doing the technical analysis, we must do what we call the fundamental analysis. Ladies and gentlemen, the old way of trading, which means using the technical alone, is not working anymore. Because why? The hedge funds, the banks, the big market players are using the technical analysis, all right? On the other hand, if a financial instrument goes down from A to B and reaches the support level at point B, all right, and we want to buy at a support level, all right, we will check the financials, okay? Check the cash flow, check the balance sheet, okay? Do the Google Asset check, check the economy news, check the sector, check the market. Is the market environment suitable to buy? Is the market itself bearish? Okay. All right. Is the market innovating? Is the company innovating? All right. Are they gaining more market share? Okay. Are they coping with competition? What are the competitors? All right. What is the future prospect of this stock? If we have a valid reason, then we'll be happy to buy it. Do not swing trade using the technical alone, otherwise you'll be surprised, okay? That's not the right way forward. Fibonacci extensions. I need to remind traders, one thing you need to understand, apart from everything else that you have learned on YouTube or on the web about Fibonacci extension, I want you to stay with me and watch the full length of this video so you may understand, okay, the nitty-gritty, okay, about Fibonacci extensions. Where do we have Fibonacci extensions? Fibonacci extensions take place beyond the 100% level. What do I mean by that? You see, if a stock moves from A to B, all right, it moves from A to B, and then it pull back a little bit, okay, so bullish momentum from A to B, and then a healthy pullback. Normally, the pullback should not go beyond the 50% and the 61.8%, a healthy pullback, and the trend continues beyond the 100% level. That's what we call extension. So the first move from here to here, that's what we call the 100%. So this point here, that's what we call 0%. Where the first move has ended, that's what we call the 100%, where we are drawing any Fibonacci extensions. And so from here to here, that's what this point is a 0%. That point here is a 100%. So it pulled back and people start buying. The extension will take place beyond the 100% level, which is right here, beyond this point. So if the price starts displaying higher high, so this is the first high. If it's going beyond the first high, we have what we call an extension. So the first move is from A to B. Now the price pull back and it goes beyond this point. That's what we call an extension. It's going beyond the first high. You can see this on the 1 minute, 3 minute, daily chart, weekly chart, monthly chart. As I'm drawing on this chart here, you can see that the price move from here. If I move my green spots from here, all right, and here to here, that's the first move, yes or no, after a kind of consolidation here. Low volatility, high volatility, all right? Now, there is a pullback, healthy pullback. Now, you see, once it crosses this point here, we are going into what we call Fibonacci extension. This is what we call uncharted territory. The price did not touch this zone before. These are what I like to call virgin zones. Levels that the price has not reached before. Now it's extending beyond the 100% level, displaying a higher high. This is the previous high. If the price displays higher high in an uptrend, it's telling us that the bullish momentum is healthy. So we want to buy. But as the price going up, what we call extension beyond the 100% level, okay, there are levels that we must watch. I would like to recommend to traders that if you are using Fibonacci extension for investment or swing trading or position trading, okay, decision, use the monthly chart. You are swing trader, you are position trader, you are an investor, and you are using Fibonacci extension to make your decision. Use at least the monthly chart. All right, this is valid for TSTWSYS 008 traders. But I want you to ignore the first extension beyond the 100% level. So remember, this point, that's what we call the 0%, where the move has started. This point here, I draw some line here, that's what we call 100%. If the price goes beyond the 100% level, what is the ultimate target? The ultimate target is the 200% level. Why? That's a very good question. Because the price, as you can see, it moves up from here after the... Oh, I'm moving my line, which I don't want to. You can see the price move from here to here, okay? That's the measurement, yes or no, okay? Traders who were buying here did not forget. So as the price pulled back, what we call healthy pullback, without going beyond the 61.8%, okay, this is one criteria for the second wave, talking about earlier waves, all right? Now, if we have a healthy pullback, traders who bought it before, what do they need to do? So you are an investor, you are an intelligent investor, you buy it, it went up to this point, okay? You see it coming down, you take profit, okay? Now what do you need to do before you buy? A pullback doesn't mean buy. There are reasons why people are selling. Why people are buying, are selling? Are they just taking profit? Are they selling because the fundamentals are getting weak? What do you need to do? Go to Google Finance, put the epic of the stock here. We are looking at the stock, which is Express Scripts listed on the Nasdaq 100, epic ESRX, that's Eco Sierra Romeo S-Ray. All right, we will go to Google Finance, we will put the epic ESRS, okay, we'll bring out the balance sheet, we'll perform what we call Google Finance Asset Test. That's the first test. The minimum we can do is the Google Finance Asset Test if you are a swing trader. We can go deeper and check other fundamental ratio. There are plenty of video on YouTube. Go and check video about the fundamental analysis. All right, the price hit a key level, it's pulling back, we want to check. As I said to you, we do our due diligence, as I like to call it, all right? What's happening with this stock? Are they making money? What sector do they belong to? What's happening to that sector? What's happening to the S&P 500? Is the market bearish? Is the market at a resistance level? Okay, we are happy. Yes, there are more to come. We are happy with fundamentals. The fundamentals are solid. The stock is discounted. We want to buy again. We buy, okay? Price going up, goes beyond the 100% level. We will measure the first move. See, price went up from A to B and then pulled back, a healthy pullback. We will measure the first move A to B, and we will set the ultimate target at 200%, which is double first move, and we project the same side. It's like we are projecting horizontal channel. You see the horizontal channel, the first channel here. I'll color it now into red so you can see it and understand exactly what we meant by Fibonacci extension. The extension will take place beyond the 100% level. So the ultimate target is the 200. You see how this stock was so desperate, the market, you see how they were pushing it here near the 200. But it couldn't reach it. But that will be our first target. As soon as it goes beyond this point, that's our first target. So there are extensions. So the stock is extended from the 100 up to the 200. Another extension will take place if the price goes beyond the 200. So another extension will take place beyond the 200. And if it goes beyond the 200, another extension will take place beyond the 300% Fibonacci extension level. So extension will take place in the zone of above the 100% level, above the 200% level, above the 300% level, above the 400% level. As you can see, this stock went up from here and went to retest the zone of 400% level. Can you see the 400 here? But now, the next question, why do we have extensions? The extension will take place if, okay, the price goes above the 100%, and, okay, we have fundamental reasons, which they are making money, all right? The market sentiment is bullish, and the S&P 500 itself is bullish. There are the market, the general market, the global market financial instrument is bullish, okay, generally speaking. And we have a fundamental reasons why the stock should be more expensive than it was before. That's why we have extension. So whenever the price goes above the 100% level, we want to see whether we have fundamental reason why the stock now should go to the 200% level. If it goes above the 200% level, we want to see whether we have, again, a fundamental reason or the market environment is suitable. At that point in time, is the market bearish? Are we in a bearish season? If you are in a bearish season, okay, chances are it's not going to go to the next target. If the market environment is healthy and we have fundamental reasons, we want to buy and hold, or we want to trade, swing trade, position trade, taking value signal, using trading triangle, trading drill, we will take it to the next level. All right. You see here, when you see once it went above the 100% level, they push it near the 200, but the price couldn't. These are fundamental reasons at this point in time. You see here, why? Look at the year, 2008. What has happened in 2008? The market cycle was bearish. So 2008, 2009. In 2009, we know that the S&P 500 has started a bullish cycle. Right here, look at it. All right. In April 2009, the stock also resumed a bullish trend like the S&P 500 itself. But in 2008 to 2009, when the S&P 500 was bearish, the stock could not reach the 200% level, but stagger couldn't reach it. It fell and come back down. But once the S&P 500, this is about a trading drill, quickly it resumed again and hit the 200 here. Notice how traders tried to sell it at 200 here, but it didn't go down very much because the S&P 500 was so bullish. They push it up, and this is another level of the extension, 261%. I'm going to come back to those extension levels soon. And it pulled back again a bit and hit the 300% level. Look how it changed direction here, nearly 300% level. Come back down all the way, okay, to the 161% level. And from there, it hit again another level just above the 300% level. A bit of pullback again, and now it hit the 400% level. This stock, in my view, technically speaking, is overbought because it's in a 400% level. Now, for this stock to go, I'm not saying that it's impossible for this stock to go beyond the 400% level. In March, we must have a fundamental reason. At this point in time, we are in the overbought zone. We must now go to Google Finance and do our due diligence. Now, what technical traders should pay attention to? There are some extensions that you must pay attention to. The first one, as I told you, do not worry about above the 100% level. The extension that you need to watch, the first one is 214% Fibonacci extension zone. Why? Because the stock went up one time from the 0 to the 100 and then extended to the 200. Now it went above a little bit above the 200% level, and we have the 214% level. If the stock struggle, remember this, if it struggle around the 214 zone, technically speaking, it's bearish. All right, remember that. Same thing, if it goes above the 100, so the target is 300, but the stock sometimes will not stop on the target exactly. So you try to go above it, which means the market try to exaggerate a little bit. They are a bit excited, but if the excitement is not viable, it's not justified fundamentally speaking, it will stop at a 314% level. That's why you can see here it went above the 300% level, around the 314. At this point in time, we'll check the fundamental again, check the market environment. What's going on? If there's no fundamental reason, we will sell. Investor will sell, smart investor will sell, hedge fund will sell, bank will sell. Because we have exceeded the target zone, which is 300% level, we go above it quickly to return back below it. We will sell. Which means you go above the 314 and then change the direction, turn around. See here? Beautiful. We will sell it using the TSTW24. So 214, 314, 414. You can see this stock here. When a little bit again, right here again, the ultimate target are the 200%, the 300%, okay, and the 400% level. But you will see the stock will try to go above those levels a little bit, which means bring us to 214, 314, 414. Some stocks, if you check the Nasdaq 100, some stocks never go above the 214. Some stocks never go above the 314. Some stocks always will come back down in the zone of 414. So remember, 214, 314, 414. These are the extensions that day traders, swing traders, and professionals. I'm going a little bit beyond my 20 minutes of self-restricted time frame, all right, which I don't want to go over 20 minutes, but I will allow this video to go because I haven't finished to say what I want to say. So remember the level 214, 314, Fibonacci extension level, and the 414 extension level. If a stock reaches the level of a 414 extension zone, you must check whether they are dominating their sector, all right? Stock like a Google, stock like a Apple can go beyond the 414. They must be dominating their sector. They must be innovating consistently. They must be a market leader for that sector. They must be making money. They must be printing money. You want to check it when a stock reaches the 414, whether they are still making money. Are they losing market share? Okay, if they are losing market share, they are under pressure. Have they failed their Google Asset test? Okay, what is the cash flow? Is the cash flow trending down? So in the last 5 years, so beginning of the 5 year, they were making money, second year, it started declining, declining, declining. What is it telling us? Their revenue is going down, okay? Now we want to check the market itself. What's happening to the S&P 500? When we are talking about S&P 500, we are talking about stocks. What are the market leaders for the S&P 500? What's happened to those stocks? Check the Nasdaq 100, the market leaders. Go to www.dayprotrader.com. Click on the page that we call Market Watch. I posted there the leaders of Nasdaq 100 and the Dow 30. What's happening to those market leaders? Are they struggling also? If market leaders are having trouble, the general market is in trouble. All right? If the market leaders are bearish, the market is likely to be bearish. You trade indices, you trade stocks, you want to know what's happening. Global market condition, talking about the Eurozone, talking about the United States, talking about Japan, talking about China. What's happening? All right? You want to push it a little bit, be a little bit smart like the hedge fund, a little bit smart like, okay, the big institution, so you also can make smart decisions. When we are talking about Fibonacci extension, we are talking about key levels. These levels are support and resistance level. In the uptrend, we have resistance levels. And in the downtrend, we are watching the support level. These are, we are here, I'm showing you one example in an uptrend. We can also use Fibonacci extension in a downtrend. For new traders, you may ask me, George, how do you draw Fibonacci extension? Using the trading software TC2000, we will start drawing a line where the trend has ended. You see here, it started here and ended here. So if you are using TC2000, you start drawing it, okay? You see, you don't see any of my extension now, so I'm drawing it now. You start drawing in from where the move has ended, from here to the starting point. As you can see, now I have 314 here, okay, a bit of adjustment. Hold on, please. Let me adjust my line because I can't see my I lost some of my line now. My 400 is not showing anymore. Anyway, but the point I want to make you to draw the Fibonacci extensions, we must start from where the move has ended and bring it, okay, to the starting point. Okay, that's how we draw the Fibonacci, okay, extensions. All right, and once we draw the key levels, we must now, okay, watch the level of a 214, okay, 314, all right, and a level of okay, 414. These are the levels that we must watch all the time, okay? If the price hits a resistance zone, it does not mean that we sell straight away, all right? We will, okay, pay attention to the fundamentals, okay, in order to have a valid reason why we should sell the stock or buy the stock. I have also mentioned to traders that I do not want to talk about a level above the 100. The reason is the extensions like the level of 138, 150, 161%. Okay, as I explained to traders before in a video that we call how to pinpoint an overbought or oversold stock, the level we are watching is the level between the 150 and 161% Fibonacci extension zone. You can watch that video at Day Pro Traders channel, YouTube channel, Day Pro Traders channel. I have recorded a video how to pinpoint an overbought zone using Fibonacci. I have also recorded a video about how to determine an oversold stock using Fibonacci, all at Day Pro Traders channel. All right, and the level that we watch at a level between 150 and 161% Fibonacci extension zone. That's why in this video I do not want to talk about the extension above the 100% level. I'm focusing on the level of 214, 314, all right, and 414 Fibonacci extension zones. All right. The extension will take place beyond the 100%, beyond the 200%, beyond the 300% Fibonacci extension zone, beyond the 400% zone. Why? Because the first move that has started from A to B. All right. So this is the level that we call the 100%, from 0 to 100%, and the extension will take place beyond the 100% level. As the price goes above the 100% level, we will use the measurement of the first move to determine the 200%, the 300%, and the 400%. One can also combine the horizontal channel projection, as you can see the red channel, we project it to the upside if the stock goes above it, to determine the 200%, the 300%, and the 400%. But as the price reaches the target zone, very often the price to try to go above the target level, either the 200% or the 300% or the 400%. But if it failed to go beyond the 214, if it failed to go beyond the 314 or the 414, and we check the fundamental, everything aligning nicely for us, we have a good reason why we should buy or sell a financial instrument. One can implement this strategy on any time frame, on the 3-minute chart, on the 5-minute chart, on the 50-minute chart, on the hourly chart, on the 30-minute chart, on the 2-hour chart, on the 4-hour chart, on the daily chart, on the weekly chart, on the monthly chart, on every time frame. I recommend to traders that are day trading to use this strategy on a daily chart before switching to their lower time frame when they are day trading. For an investor or swing traders or position traders, I recommend the monthly chart. The higher time frame commands the lower time frame. One can use this strategy on a weekly chart to determine the key levels and then switch to the lower time frame, even 2-minute, 3-minute chart, and observe the reaction of the price around these key levels. The best setups will take place around the 214, the 314, and the 414 Fibonacci extension level. So if the price at 214, 314, and 414 on the daily chart, on the weekly chart, on the monthly chart, we can highlight that level and then switch to the first best time frame for day trading purposes. It doesn't mean that we sell straight away, but if the price is at these key levels, we will highlight that level because it's a resistance level, and very often the Fibonacci extensions allow the market participant to identify hidden support and resistance level. As you can see, when the price reaches this level here and it starts going up, we don't know where at the next resistance level because the price did not reach this level before. So for the first time the price coming around this level, the Fibonacci extension level allow us to identify hidden support and resistance level. That's the gorgeousness of the Fibonacci extension level. Apart from using the Fibonacci extension to determine overbought and oversold zone, one can use Fibonacci extensions to determine hidden support and resistance levels. One can also combine Fibonacci extensions with a channel projection. As you can see, the first channel here is the horizontal red channel. We project it as the price goes above it. If the price dip below is a channel, we will project the channel to the downside equal size. All right? As always, when we are trading using Fibonacci retracement or Fibonacci extension, ladies and gentlemen, we cannot afford to violate the market's patterns. There are three market patterns: a rising channel, a declining channel, and a horizontal channel. So, you want to sell in a declining channel. You see the channel that I draw on this chart here, okay? It's a rising channel, all right? But within that channel, we have other bearish channel. Look at this. The price went down here, yes or no? But as the price is going down, the price is not going down in a straight line. All right? So during this time here, this is not the best time to buy. We will prefer to come out of this small bearish channel. So it went up, it come out of a bearish channel here. All right? Again, look here. Again, we have another. During that time, we can contra trade, which is a risky trade. We can sell here, but it's a contra trade. It's a risky trade because the first move is very bullish, which means that the dominant force is bullish. We can wait. If you don't want to sell, we can just wait. We don't want to sell, step aside, watch other traders sell it. Once it's out of, because if the fundamentals are solid, all right, and we know that the stock has more to give, we can just wait until it comes out of the smaller bearish channel. And here, again, we look for opportunity to buy. And at this point in time, this is on the edge of the blue line and also out of the bearish channel, this angle here. We can use at this point in time the TSTW24 or the TSTWSY08, TSTW24 for day trading, TSTWSY08 for swing trading at this angle here. Here it is. It's pulling back here, didn't go down very much. What has happened here? Traders that are drawing the trend line will know what has happened here. Why it couldn't go down here? There's another line. We draw a channel. We don't want to forget what? The median line. Where is the median line? All right? The median line is the middle line of the blue channel. Sometimes the price will find a support just there. You see here? It pulling back near the median line. So my smaller channel has stopped on the median line. Once it's out here, again, come here. Some traders are selling on the edge here. It's up to you if you want to sell for day trading purposes. That's okay. All right, on the edge, look for it gently, gently, handle it. Okay, now it crashed through it, come back down. Now again, you see, though the price is going up, we have a mini bearish cycle. So in order to time the market, is for the mini bearish cycle to end. So we are in a rising channel. As soon as a mini bearish cycle has ended, we are ready to buy again. Out of this channel, here again on this angle here, we are looking for opportunity to buy. First target is the median line. So it's going up, watch the median line. It may stop here, come back, you see it's struggle here a bit, you see here. So do not forget the median line. So the bread and butter of trading is the channel. You can draw in on a daily chart and then switch to the first best time frame. For TSTW24 today, I say, if you are lazy like I was before, at least use, okay, the third best time frame. Okay, draw the key level, draw the channel, and then before you switch to the first best time frame, if you are lazy like I was before, because new traders think differently, okay? That's why I'm saying this. Here again, we have another smaller channel. Okay? If you're a new trader, draw your channel, and you will see that you start trading better, okay? And also pay attention to the economy news. Here you see another mini cycle. Again, it's out again. Here it couldn't come very close, and again, another cycle has begun. Watch the median line, it's targeted again on the edge of the median line, and then boom. Where are we now? What's happening now for this stock? That's a very good question. Now we have again another mini cycle here. Okay. All right, you see here, another mini bearish cycle in a rising channel is out of it, and it push it up and stop on the edge here. Now we are sitting on the median line again of my channel. Will it go back up? Now we have a doji here on the monthly chart. This monthly candle is not yet closed because this is the month of October 2014. We'll wait until this candle is closed. But we on the edge, all right? We on the edge of the median line. Let's color this line now into pink, okay? All right, you see the pink line? And now what I'm going to do, I'm going to switch to the 15 minutes chart, okay? We want to see whether we'll see my pink line. And if we can make a decision, hopefully we'll see my pink line. What is it? It's not showing on my 15-minute chart. Okay, go to the hourly chart. Hopefully, here it is. You see, the pink line is the median line that we have drawn, okay, on a higher time frame. So you see how today it was coming near the median line, and some traders were buying here. This is how we want you to trade. We want you to use our trading system on the edge, all right? And now we're on the hourly chart. We cannot afford to trade on hourly chart without drawing the trend line again. You see, we can draw a trend line. So you see, I don't want to draw it all the way up here. That's because this, you can see that the price just popped with one candle above it. So I'm ignoring that candle. That's why I'm drawing it through this, because this candle is just a bit of exaggeration. All right, and it's not usable for me. So I have my one line there, and I just choose, I choose this one and make it parallel to the first one. Okay, so now if it's out of the blue channel on my hourly chart, because I want to zoom into it, I will draw another channel parallel like this. And so on and so on. And if I want to make my decision, suppose I want to buy this stock, I'm desperate to buy this stock, I would prefer it at least like here. It's not too bad place. You see those people who bought it here, that's a better place because it's close to the pink line and also on the edge of this channel. But when I'm buying here, I'll be very, very careful, okay? Careful, gently, all right? So this is what's happening here. I hope you have learned something from the video also about how to trade Fibonacci extension like a pro. To summarize this video, the extension will take place beyond 100%, 200%, 300%, and 400% Fibonacci extension level. The levels that we want, the Fibonacci extension level that we want to watch are the 214, the 314, and the 414 Fibonacci extension level. This is about technical analysis. Once we see a technical setup, we must now validate the technical setup by going to Google Finance and Yahoo Finance. After the verification, we must use what we call the trading triangle. Check the market first, which is the S&P 500, all right? What is the global market environment? What is the market sentiment at this point in time? It is the best period to buy. It is the best period to sell. You are day trading. Pay attention to the gap periods. It is the best time for day trading, all right? Which financial instrument are you taking? Trading, if you are trading stock, check the volume bar. Do we have a surge in trading volume? Or you want to know more about stock volume trading? Go to www.dayprotraders.com. Until the next time, enjoy yourself and be very happy. We are the TSTW 24 traders. Speak to you soon.